Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, we're going to talk about another token that got listed on Coinbase today, and this token is called the Perpetual Protocol token or the PERP token, right? Again, as always guys, I highly recommend you guys to do your own research on any other projects we cover on our channel. And for this project, I recommend you guys to go to their website perp.fi in order to learn more about this project, right? So for the purpose of this video, we're going to do a peripheral analysis for which we're going to rely on the information presented on CoinMarketCap's page for this token. But this is only going to be a peripheral analysis, which means you need to do your own in-depth research before you put your hard-earned money on this token, right? So what is Perpetual Protocol? Perpetual Protocol was launched in late 2019, originally under the name of Strike Protocol. Perpetual Protocol builds on an Uniswap-inspired automated market maker design, which is based on constant product curve. Perpetual Protocol's liquidity pool K is virtualized and determined algorithmically rather than relying on liquidity providers to determine the curve of the given market. Perpetual Protocol can programmatically set and update the parameters of the virtual AMM using the equation x times y equals k and offer a competitive product for any given market at all times. So again, first of all, there's a lot of information that we need to break down from this first paragraph. So let's break it down one sentence at a time. So the first thing that you need to know is it's a project that has been around for quite some time. It's been around since the late of 2019 under the name of Strike Protocol. So that was the original name of the protocol, and they renamed it to Perpetual Protocol. And it's a protocol that builds on an Uniswap-inspired AMM, which means it's a platform that has gathered a lot of inspiration from Uniswap to build an automated market maker similar to that of Uniswap, but completely with a different kind of like equation and all that, right? So if you see the liquidity pool, which is considered as K, is virtualized and determined algorithmically. So the liquidity pool, unlike a traditional automated market maker, is not determined in that way. It's determined using a virtualized and algorithmic model, right? So that's basically how the liquidity pools in Perpetual Protocol are determined. And instead of relying on liquidity providers, so instead of fully relying on people who produce liquidity in order to sustain itself, they've used a method to determine the curve of the given market. Perpetual Protocol can programmatically set and update parameters of the virtual AMM. So again, instead of relying on the liquidity provider, they've used an equation called x times y equals k, and where k stands for liquidity pool. They've used this algorithmic and virtual equation to create liquidity on their protocol, right? And this also provides competitive product for any given market at all times. So they've completely redesigned the AMM using their own unique method of creating liquidity and making the AMM work through algorithmic means, right? So that's basically what Perpetual Protocol is, and that's basically its uniqueness compared to several other AMMs. The team claims that PERP is the first virtual AMM which enables markets with no makers while still guaranteeing on-chain liquidity. These marketless markets lowers the capital demands traditional markets require and pave the way for new and emerging futures. So again, a little more on their AMM. So if you see, the team of Perpetual Protocol basically claims that this is one of the first virtual AMMs, which means they've relied on less of the liquidity providers' capital and more of virtual and algorithmic models in order to create an AMM. And by doing so, they enable no market makers. You don't need a market maker in this place while still guaranteeing on-chain liquidity. So that's a very unique system that they've used, because they don't rely on market makers to create the market, whereas without market makers, you may think, how can they have proper on-chain liquidity? but they do use the virtual AMM method to have on-chain liquidity without any market makers. So that's a pretty cool thing from their end. And these marketless markets lowers the capital demands traditional markets require. So again, since they don't rely on market makers, they don't really rely on any capital inflow to provide liquidity to their pools, right? And this basically leads to a new and emerging future for AMM and the DEXs we are used to and familiarized with, right? So that's basically what Perpetual Protocol does. It does a very revolutionary way to provide liquidity in an AMM environment, right? So Perpetual Protocol's insurance fund is guaranteed by the holders of the native token, PERP. The insurance fund is used to cover any unexpected losses from leverage trading. If the insurance fund is depleted, Perpetual Protocol will mint more PERP to refill the insurance fund and cover the losses. So again, now we are going into a little bit more of the tokenomics or the tokens itself and the tokens functionality itself. So they have an insurance fund which is guaranteed by the holders of the native token called PERP. So they have a native token PERP, and this token is basically guaranteeing the insurance fund of this particular protocol. The insurance fund is used to cover any unexpected losses from leverage trading. So again, if since there is lots of losses associated with the leverage trading, if a loss happens due to leverage trading, the insurance fund, which includes the PERP tokens, will cover for any unexpected losses, right? If the insurance fund is depleted, Perpetual Protocol will mint more PERP and refill the insurance fund and cover the losses. Again, this is a little bit of a controversial line, because if there is a loss and the funds from the insurance fund are used to kind of like rectify the loss, the insurance fund will be empty, and therefore the protocol is automatically designed to mint more PERP tokens. So the token supply is kind of like replenished by the protocol itself by default in order to cover for the losses, but it also instills a little bit of a controversy, because the protocol, even though it is a kind of like a smart contract decentralized platform, it still shouldn't be necessarily allowed to mint tokens under these circumstances, because again, it's true how we care about people minting money from thin air causes inflation, but this protocol basically mints new tokens from when the insurance fund is depleted. So that's kind of also kind of like a problem in my personal opinion, but again, we'll cover this topic in detail in a few seconds. So this is one of the, in my opinions, red flags of this platform, right? We obviously associate the federal bank in creating money from thin air, and in a decentralized manner, this protocol basically creates money in order to top up the funds in the insurance fund, which I personally find a little bit not really impressive from my perspective, right? So but moving on, if you see, PERP holders can stake their assets to Perpetual Protocol's staking pool for a fixed amount of time. In return, stakers are rewarded with a percentage of transaction fees accumulated across the protocol, in addition to inflationary staking rewards. So again, this also provides, this sentence or paragraph basically also provides a little bit of more information about what PERP holders will benefit. So PERP holders will be able to stake their assets on their platform, and they'll be able to stake it for a fixed period of time in return for rewards, right? And this reward includes two types of rewards. The first type of reward is a portion of a transaction fees that's happening on the platform itself, and they also get inflationary staking rewards. So again, the token rewards are inflationary, so this is also going to, in the long run, dilute the market, because when people are getting free money, they dump the tokens, and that's going to basically cause the token price to move sideways or even crash, right? So this is one of the second issues that I have with this protocol. But again, staking rewards need to be inflationary for the initial period of time in order for people to come to the platform and get incentivized on these tokens. But the problem is, if there's no incentive for them to stake those inflationary rewards, they will just keep dumping it and then crashing the market, right? So that's something that I also have a slight issue with this protocol. So as the name suggests, Perpetual Protocol focuses exclusively on perpetual swap contracts. At launch, Perpetual Protocol will support BTC, ETH, and Link, and can onboard other synthetic assets such as gold, crude oil, or other fiat currencies through governance in the future. So again, yes, it's not a typical AMM. It's an AMM specifically focused on perpetual swap contracts, which means you can do a lot of high risk trading, which I personally wouldn't recommend anyone who doesn't have the experience or who doesn't really know what they're doing, take upon themselves. But if you are a comfortable person with perpetual protocols and contracts, then the platform initially supports Bitcoin, ETH, and Link, and I believe that they are also expanding to a whole list of tokens as well. Apart from that, you can also use this platform to trade assets like gold, crude oil, and other fiat currencies in a fully decentralized manner, but this will be added to the governance proposal in the future, right? So traders can get up to 20x leverage on both long and short positions. So again, that's pretty straightforward explanation. Perpetual Protocol is supported by a decentralized autonomous organization with a strong presence in Asia. It is not intended for United States residents or citizens. Again, people of the US, if you want to use this particular protocol, you cannot use it, unfortunately, even though it is a DAO. I don't think it's fully DAO, it's a full DAO yet, but I think they're definitely getting there. But if they become a DAO, then I don't know if they will be able to, if residents of the US will be able to access this protocol. But for people who are outside of the US, they can definitely access this protocol, and I think the DAO is only getting stronger and stronger, right? So I think Coinbase is in the process of listing tokens which are most likely to become a DAO or which are already a DAO, because Coinbase, being a US company, has to focus on regulatory pressures from the US government, and therefore they are focusing on listing tokens that are either partially or fully a DAO or decentralized autonomous organization, right? So that basically covers the overview of the PERP token. So let's go to the website to see what other information you can find. So going to the website, you can pretty much see a very simple and clear website. Perpetual Protocol version 2 Curie is coming, so they are launching their version 2, which you can learn more about by clicking on the Learn More button. Decentralized perpetual contracts, on-chain DEX with highly efficient liquidity provision, and up to 10x leverage for makers and takers. Again, even though they don't really rely on makers, their unique formula allows them to provide liquidity without the requirement for makers, but you can still become a maker and taker despite that, and you can click the Start Trading button to get up to 10x leverage. Again, I'm stating that there's a lot of risk in kind of leverage trading and all that, so you need to be extremely careful. Buying this token is one type of risk, but participating in leverage trading, especially decentralized leverage trading, is another extremely different type of risk altogether. So you need to be extremely careful before you start trading, right? So again, there's also quick graphics and information about the protocol itself, stats that speak for themselves. So they have an all-time volume of about more than $17 billion in all-time volume. They have more than 15 markets, which again will also include cryptocurrencies and non-crypto assets. They have more than 3 million trades executed on their platform and more than 2,000 traders they are serving currently. So you can also get other information by clicking on Dune Analytics or OK link here. Why Perpetual Protocol? So why choose them? So you choose them because of the fact that they are best in class performance. Obviously, they have very unique AMM formula that they are using to completely distinguish themselves from other protocols. Decentralized by design. Again, this platform is decentralized. Trade any assets. So yes, they have more than 15 assets that they're supporting, but you will definitely get more and more assets in the future depending on the governance proposals, and you can definitely trade a lot of comfortable assets that you really can't find in a lot of other locations on this platform, right? And gold, fiat, commodities, and everything that you want will be, everything basic will be supported here, and there'll be a lot more exotic assets that will be coming in the future, right? So you have FAQs which you can also read through to understand this project even more. This provides more information for people who don't really have a lot of time going through the entire platform. You can also look at their full list of frequently asked questions here. Developer ecosystem. Perpetual Protocol empowers developers, liquidity providers, and traders to participate in a financial marketplace that is open and accessible to all, right? Again, you can learn more about that here. Strategic investors. So Binance Labs have invested in this project, and that's one of the reasons why Binance listed this project earlier than Coinbase. Alameda Research, which is also a very popular venture capitalist, have also invested in this project. Divergence Ventures, CMS, Three Arrows Capital, Mechanism Capital, Multicoin Capital, and Z Prime Capital are other venture capitalists who have also invested in this project, right? So apart from that, you also have other information at the bottom. They also have bug bounty program, and you can also look into their audit information. But overall, it's a pretty straightforward and simple website with all the information present in bite-sized pieces for anyone to understand their project, right? So going back to the coin market cap page for Perpetual Protocol, this token is currently ranked 90th by market cap, and it's currently trading at $16.23 at the time I'm making this video, with a 3.75 or 3.74% decrease in the past 24 hours. So it seems like this token is kind of like dumping despite a Coinbase listing. In fact, it's not dumping per se, it's actually moving sideways, which is again something that's happening to many tokens that are going to be that are recently listed on Coinbase, because Coinbase is kind of like listing tokens on a regular basis these days, and a lot of people are not really bothered to look into these tokens in that detail, because in the past Coinbase used to list tokens extremely rarely, and that kind of caused a Coinbase based hype and pump, right? Although like ARPA, which is a token that we covered yesterday, has been pumping like crazy, PERP has not really had a lot of significant pump, right? But that's because of the fact that the market cap of this token itself is already quite high, so there's a lot of capital that's required to pump the price of this token, because the market cap is bigger and getting bigger and bigger. So it's about $1.114 billion in market cap, which is a huge number, per se. But again, compared to several other projects, this token does have quite a bit of market cap. So obviously there are a lot of smaller tokens with lesser market caps to make some really decent gains on. This token will take some time to pump with all the inflation staking rewards and the protocol literally minting tokens to replenish the insurance fund. There's going to be a lot of things that will definitely, a lot of people won't really agree with, including myself. And I think people like me won't really be too keen on investing in this project. But considering the fact that this token is listed on Coinbase and it's also available on Binance, and Alameda Research is investing in this, there may be a few hodlers who may potentially buy this token. But I think the market cap can technically stagnate for the short term. And it can go maybe as high as 1.2 billion or even 1.3 billion, but it will probably relatively be somewhere between the 900 million to 1.15 billion dollars in market cap, right? I don't think this token is going to shrink, but it's going to move sideways for quite some time. So that's something that you need to note if you want to invest in this token, right? So when it comes to max supply, there's no max supply information, but the total supply is 150 million tokens, which is quite a decent number compared to several other projects which have billions and billions of tokens as max supply. But also if you see about 68.7 million tokens are in circulation. So again, a decent bit of tokens are in circulation, which is going to be good for this token, because if this token has a lot less percentage of circulating supply compared to total supply, this token would have a very hard time getting off the ground, right? But it seems like this token has some form of community who've been following them since 2019, and there's also a lot of people who are interested in using this platform who will find this token a valuable token. But there's going to be a lot of sideways movement continuing, because this token still has a lot of inflationary rewards that will eventually get dumped into the market, which will make the price of this token move sideways, right? Again, that's just my opinion, guys. If you go to the charts itself, you can clearly see that this token, although it has been doing quite well in the recent times, it isn't really that great compared to several other projects, because if you see the initial price of this token was $2.08 on 13th of September 2020, which is when the price of this token is available on CoinMarketCap. The token was literally pretty much at its all-time lows, reaching 86 cents or even sometimes less than that, 72 cents or even 68 cents, late last year. And if you had managed to buy the token at that time, you would probably be sitting in a really good pile of gains. But if you see, the token was moving sideways until early this year, when the token went from literally nothing all the way till all-time highs of about $13.32 on May 19th of May this year, and it kind of crashed immediately after that, reaching $4.10, and then immediately rebounding back to an all-time highs of about $21 per token, $21.22 per token. This was during end of August this year, before crashing back down, and now it's kind of like going up and down again, right? So it seems like this token can easily retest the $14 per token mark, which will be a good opportunity to get in. Again, if you feel like this token is a good buy. I personally don't think this is a token that I would personally buy, but if you want to buy this token, you need to probably wait, because this token is going to go below the $14 mark, which would be a good entry point, right? Again, not financial advice, that's just my opinion. If you go to the Bitcoin comparative, on the other hand, Bitcoin comparative was also pretty similar to dollar comparative. The token was initially worth I think 19,000 satoshis per token, before going to an all-time lows of about 3,700 satoshis on 30th of December last year, and then it reached its first all-time highs of 21,000 satoshis, reached a relative lows of about 10,000 satoshis, before making a new all-time highs of about 32,000 satoshis, going back down to 12,000, and then making its proper all-time highs of about close to 45,000 satoshis per token, and now it's in a downward trajectory, right? I think in the Bitcoin comparative, this token can go lower. I think this token can easily touch the 20,000 satoshis mark, which will be a good entry point. And since Bitcoin itself is pumping right now, I think this token will definitely go below the 20,000 satoshis mark per token, which will be a good opportunity to enter. But I think if you're trying to buy this token with Bitcoin, expect a lot of volatility, because the Bitcoin price is also going up right now, right? So both in the Bitcoin and dollar comparative, I'd suggest people to hold off if you want to buy this token, because you will definitely get some good entry points in the upcoming weeks, right? So if you take a look at the markets itself, you can basically get this token from Binance, which has the most of the liquidity. FTX is also listed this token, because again, Alameda Research is owned by FTX's founder, Sam Bankman-Fried. So it's obvious that if Alameda Research has invested in a project, they most likely have a chance to be listed on FTX. So FTX also has good liquidity, and now Coinbase is listed this token as well. So if you take an opportunity perspective, this token is pretty much listed on all the major exchanges, or at least the top 3 or top 4 major exchanges. Even it's listed on Kraken as well, and OKX, so top 5 major exchanges, which means the upside potential for this token is going to be low, because now that all the at least the 5 major exchanges in the world have listed this token, there's no real hype about this token being listed on other exchanges, because all the other exchanges are less relatively popular than these exchanges, right? So it kind of poses a question that, let's say if Binance was the only exchange that has listed this token, right, then obviously there's a chance that FTX or Coinbase or even OKX or Huobi Global may list this token, that may pumping it a little bit higher. But since all the well-known major exchanges have already listed this token, is there a reason to buy this token at this price point? Because there's literally not a lot of liquidity. Sorry, there's literally not a lot of hype when a tier 2 or tier 3 exchange lists this token, right? So that's another thing that you guys need to think into if you want to look into this token. But what's my final verdict on this token? I think I've seen a lot more projects with a lot more innovation when it comes to perpetual contracts in a decentralized manner, which have a lot of upper potential, because this token is already in the billions of dollars in market cap. There are tokens that are less than $100 million or even $200 million in market cap, which can easily pump and make at least a 10 to 20x easily compared to PERP. So I personally would be focusing on those kind of tokens rather than this token. But obviously this token is a safe bet for people who want to hold a perpetual contract token, and this is basically the safest bet that you could get. And since it's within the top 100, there's no risk of this token kind of like crashing, because once the market starts pumping after the Bitcoin pump, all the altcoins will start pumping, and that's when tokens like these can definitely get some short-term price potential. And I think this token can easily cross its previous all-time highs of $21 and maybe even touch the $25 to $30 mark by the end of this bull run, which is a good possibility, but it can easily crash after that as well, right? So that's just my personal opinion, guys. I'm not going to hold this token for long term. I'm just going to hold a bag of this token for short term, and then we'll sell it after the all-time highs of this token is reached, right, by the end of this bull run. So that's just my opinion, guys. Again, remember, guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please click the like button and subscribe for more videos. See you in my next video. Bye.